Thank you very much. And good morning. Greetings to from me and from everybody here at NCAfrica. Thank you so much for joining and welcome to the NCAfrica SME Fireside Chat launch. My name is Grace Thuo. I'm the Senior Communications Manager Country Programs at the Global Alliance for Improved Nutrition, which is in short GAIN. And at GAIN, our mission is to advance nutrition outcomes by improving the consumption of nutritious and safe food for all people, especially the most vulnerable to malnutrition. And how do we do this? One way that we are working towards, especially making healthier diets accessible, especially to the most vulnerable, is through our work with SMEs, or what we call small and medium size entrepreneurs. As we may know or not, almost all the food that comes to consumers, it comes via the private sector. Even the most vulnerable, they receive their food through the private sector in one way or another. It could be the small retailer at the corner or a small shop, however that looks like in their context. And in sub-Saharan Africa, we are looking at 70 to 80% of food production, distribution, the sale of nutritious foods is managed by small and medium enterprises. However, SMEs do face a lot of challenges, especially nutritious foods SMEs, and these include access to finance, limited technical skills and knowledge, and favorable regulatory environments, just to name a few. And we at GAIN, we believe that if these barriers can be addressed, then we're able to have more jobs created, greater availability of nutritious and desirable foods, and especially, at prices that the most vulnerable can afford. So we have been working with SMEs since 2013 through GAIN's Nutritious Enterprise Unit. And this is GAIN's Center of Excellence in supporting small and medium-sized enterprises, which currently represents links of, well over 1,000 SMEs. And over the last decade, since we've been in this work, GAIN has provided business development services to over 500 SMEs, and we continue to do that so we can see this critical mass continue to grow and expand in its reach. So how does Nutrition Conversations Africa fit into all of this? Nutrition Conversations Africa is a Wandieville GAIN collaboration, and it is an advocacy platform where we come together to illuminate African nutritional challenges and opportunities. We give room for transformative ideas and game-changing solutions. We have through continuous conversations. We have call to actions and advocacy support and engagement to curb malnutrition in Africa. So I'm very excited that we are launching this platform. It is a much-needed one. A lot of feedback that has come to us in terms of the knowledge gaps that exist for SMEs, and in this case, nutritious foods SMEs, and how they would want us to engage with them. And so we'll be bringing in different voices around nutritious food SMEs so we can learn, share knowledge, and find solutions that will accelerate nutrition impact in Africa. We look forward to many more meaningful engagements through the SME Fireside Chat, and we trust that these engagements are going to help build impactful linkages for the nutritious foods SMEs. And I'm very pleased to be moderating today's session with my colleague, Yewande Kazim. She is the CEO of Wandieville. And so on behalf of GAIN and Wandieville, thank you for joining us for this launch, and we're really excited to be here. Over to you, Wandi.
Thank you, Grace. I would like to welcome everyone once again to our very first SME Fireside Chat. My name is Yewande Kazim, CEO of Wandieville, and I'm pleased to be moderating today's session with Grace from GAIN. So at Wandieville, one of our main objectives is to create awareness and demand for nutritious food, impact knowledge through advocacy, support, call to action on the challenges in the agricultural and nutrition landscape in Africa. I think in summary, our overall goal will be a day or a time where Africa is not associated with malnutrition. I know it seems huge, but that can definitely happen, and we're hoping we'll get there. So today we're pleased to present the launch of NCAfrica, the SME Fireside Chat. The significance of this series cannot be overemphasized. It provides entrepreneurs access to experts in the industry, entrepreneurs in the nutrition and agricultural space to be specific. It gives them an opportunity to hear from experts on a number of issues critical to the growth of their business. It also provides professionals an opportunity to impart knowledge, skills required for sustainability and the development of effective entrepreneurs. We'll be discussing a variety of issues such as capacity building, technical know-how, funding opportunities, networking, and other critical aspects of becoming an effective entrepreneur in Africa. One of the things we have to put in consideration is SME accounts for around 80% of jobs in Africa, making them an important mechanism for socio-economic growth, with approximately 44 million SMEs in sub-Saharan Africa. There's a need for steady flow of funds to turn ideas into reality. And one of the biggest challenges that SMEs have is always access to finance. And failure to raise enough funds can hinder innovation, growth, and development in any industry. As a result of this, that's why we are launching the SME Fireside Chat, and with a topic that is critical for the growth of Africa's food and agriculture system. So today we'll be discussing raising funds in a dynamic market. To begin the session, I'm pleased to introduce our keynote speaker, Aimé Kwizera. He's the manager of Nutritious Food Financing at GAIN in Africa. He'll be giving us a keynote speech, and I'll give you a little bio summary about him. Aimé manages the SME pipeline development and the provision of technical assistance of the Nutritious Food Financing Facility, N3F, in Africa. He has over 10 years experience in nutrition-led program management, grant making, business development, agribusiness, and SME finance, which contributes to his remarkable achievements for the agri-food sector, both in GAIN and his previous roles internationally. So if you have any questions, please feel free to comment, put it in the Q&A box, and I'll give it to Aimé, our keynote speaker, to give us a 5-minute speech. Aimé, over to you.
Thank you so much, Wendy, and thank you for that introduction. And thanks for Grace for the introduction also from your side. So as Wendy, you said, the manager at GAIN, and have been at GAIN for the last 6 years. And I've been working on programs that support small and medium enterprises across the agri-food sector, or simply the agribusiness sector across Africa and Asia. So with that experience of 10 years, I've been able to support as many as SMEs as I was able to do. And through those programs, I've seen achievements and ways that they were able to access finance, which is the major challenges. So thank you for this opportunity, and thank you for giving me the opportunity to be the keynote speaker of the first ever Fireside Chat of SMEs and raising finance, yes. And I'll be happy to keep supporting the SMEs. So allow me to retaliate a little bit on the importance of SMEs. You've mentioned some the importance, but when you look at the importance of SMEs, it's immense. Small and medium enterprises, or commonly known as SMEs, in the African food systems, transformation is irrepressible. You know that in 2021, the UN Food System Summit, one of the resolutions was to increase the finance that is allocated to private sector. So throughout the value chain, SMEs are the key drivers of food supply, job creation, and regional economic growth. They are the backbone of many food systems and are essential for ensuring access to nutritious food, especially for the low-income consumers. Especially when you look at the sub-Saharan African markets, it's immense. However, they face significant barriers to growth, largely because they lack reliable access to finance, and their leaders may have limited managerial technical skills. For instance, a survey conducted by GAIN in 2018 on 107 African SMEs in the agri-food sector found a funding gap of nearly $200 million US. You can imagine that gap. Without sufficient access to finance services, these SMEs are unable to expand operations and market reach, enhance the nutrition value of their products, improve on their food safety standards, or start working more sustainably. The agribusiness sector has become more dynamic and harder to predict today. You can imagine the effects of COVID-19, the invasion of Ukraine, climate change, among others, have shifted the agribusiness market, thus making it difficult to raise funds or maintain their stability. I'm happy to be the first keynote speaker for this wonderful platform for SMEs in the agri-food sector, and looking forward to provide guidance on practical solutions for SMEs at any time. Yeah, thank you so much, and it's a pleasure being here, and happy to continue the chat about how we can support our SMEs to raise funds in this dynamic market. Thank you so much.
Thank you so much, Aimé. And I wanted to ask you, based on, your year, based on, finance perspective, like point of view,
Yes.
how to advise SMEs. And, when we're talking about SMEs funding, we're talking about in a dynamic market, more like, sourcing funding in Africa. So what can you say about sourcing funding in a dynamic market for small SMEs? What are the exactly, how do you prepare? What makes you more competitive and be able to, close to securing the fund? And what kind of funds are available?
Yeah, thank you, Wandi. So it's broad. The good thing is that these services or these sources of financing are available, but some of the challenges rely, as I mentioned, rely on the technical and managerial skills of the managers or the person who is supposed to reach out for sources of financing. So it depends on the practice and approaches these SMEs take towards raising finance. So with my experience, currently I'm working on NCAF. It's a Nutritious Food Financing facility, and I work closely every day with SMEs. There is no day that passes that have had not a call or a meeting with an SME across Africa. So there are challenges and practical ways that they can adopt to reach out to financial service providers. And I'll give examples of how they can do that. So first thing they have to consider is to implement a regular funding scan process to not miss out any opportunities. There are opportunities in the market, so that scan is necessary. They also have to benchmark similar organizations to theirs. The best prospects are those who are already interested in your area of work. So who is there? Who is interested in my area of work? And third, they have to create a data bank where they can easily access general information about the organization, management structure, policies like gender, environment, etc. This would save them valuable time. Number 4 is to think outside the box. Many of the funders just focus on the end and not the means. Try to think of new ways of connecting your operations to the goal of the funder. Most of the funders are now responding to sustainable development goals. So the question you can ask yourself as an entrepreneur is, do I really respond to any of the SDGs? Or if there are many, that is fine. So you might know that gender, climate change, hunger is something that you should be considering. For example, if they are approaching again and you're not responding to SDG number 2, you are likely failing to meet our goals. So point number 5, they have to prepare one pager or a pitch deck to easily explain their business or their project idea. So you have to approach a financial service provider with a clear, short, but inclusive pitch deck for your idea. And before they apply, they should check with their colleagues or partners if they are not considering applying as well, because partnerships with other organizations or partnership between SMEs and NGOs to complement expertise is often seen as strengthening component for financial service provider. So those are the do's, what I can do to make sure that they can secure funding. But there are 2 points that I would like to highlight. Some of the don'ts, what they should not be doing, because most of them they do, but that might lead us to lack of chances to secure funding. So SMEs should not apply for everything. We know that they have limited access to finance, but don't apply for everything that is showing up. Instead, they should focus on fundraising efforts that make fewer high-quality approaches to funders that fit their profile. The second point to not do is to not forget to archive past and possible source partners as well as previous applications to avoid double work next time. So yeah, those are the points that what they can consider when fundraising and what they should not be doing when fundraising. Thank you. Thank you.
Thank you, Aimé. So, but I'm going to ask you a question because it seems a little bit contradicting where you said you should go and check for what's going on and apply, but then you shouldn't apply for everything. Are you saying you shouldn't apply for everything in an organization, or you shouldn't apply for everything that is available? So what exactly is that?
So when I mentioned you should not apply for everything, is everything that is available. So you see probably GAIN has a call for proposals, and another organization has a call for proposals, but because all of them, they are providing a grant. For example, this is the one that is interesting for SMEs grant. So when you are applying, don't just apply because there is free grant or free money outside. So look for what is really aligned with your business or your plan, your strategy. Because if you divert your efforts on fundraising to many applications, you might end up not getting any. So put your effort on ones that really fit your profile or your business strategy. You'll stand a chance to win. So it doesn't mean that you should not apply for more than one funding opportunities, but choose the best that is there on the market. Don't just submit the pitches whenever relevant. There might be time that you might need to go back to that institution, but they know already you have applied for irrelevant call for proposal in the past, and you might that might decrease your chances of being selected.
Okay, thank you, Aimé. We'll come back into what exactly NF3, like what your organization is looking for in terms of funding and what kind of businesses you're trying to fund. But let's get in. I'll try to bring in, we'll come back to that, and I'll bring Affi today. So thank you very much for the speech. It's very insightful. So now I just want to introduce Affi. We're happy to have Affi here. She's the CEO and founder of Reelfruit, the largest fruit processing, packaging, and distribution company in Nigeria. The company was founded in 2012, that's over 10 years ago, and has distributed a range of dried fruits and nut snack through a variety of channels across more than 850 stores. Wow, that is actually incredible. She has done, she has distributed to airlines, schools, hotels locally, while also retailing internationally in the United States, in the UK, Switzerland, Belgium, and Saudi Arabia. So Affi, you need to give us tips on that. She's a Stanford Seed alumni and an MIT Legatum Fellowship alumni. Affi is passionate about unearthing the job and wealth Nigerians' creation potential of agriculture for youth and farmers. It's pretty much creating jobs for African youths and farmers and opportunities. She'll be sharing with us today from a perspective of a successful entrepreneur in the food system space, how she's been able to mitigate issues around fundraising. Affi, I'm happy to have Affi here. I've known her for a couple of years in the industry, and we've had the opportunity, we've actually become friends. So it was amazing having Affi because we have this discussion all the time, and I know she has a lot of experience. So Affi, I want you to come and keep it real. Tell us about something from an entrepreneur's perspective, sourcing funds in a dynamic market, the types of funds that are available, and how do you stay competitive in the market?
Thank you for that introduction, Wandi, and good morning to all the guests who are listening. I am hoping that by the end of today, I can be of value to some of you by just giving more practical tips as to how we have been able to raise funding and what I think the opportunity is for African entrepreneurs. I think that, as the previous speaker has said, there is a dearth of funding. So there is a huge demand for funding and lack of supply. And in this kind of environment, I always kind of appeal to entrepreneurs to basically, be a bit dispassionate and unemotional and really look at where the opportunities truly lie for their business based on what type of funding is available, who are the kind of funders that fund their type of businesses, and what requirements and criteria are funders looking for. I often think naturally so, when entrepreneurs start small businesses, we don't often think about like funding and who are the different funding partners that are going to fund us along the journey. You're solving a problem and a million problems at the same time, meeting a need in the market, etc. But ultimately the scale to which you meet that need, at some point has to really tie in to who's going to give you the capital to grow your business and continue to scale. So using my company as a case study, like most people, I started actually my snack company Reelfruit, not because I saw a quote unquote gap in the market. I did kind of see a gap, but my mission was really around building a scalable and large agribusiness that would create a lot of jobs. And so when I started introducing my product into the market, I looked at how best to grow and scale the business. I was already scale-minded from the beginning, primarily because I just knew I wanted to build a big business from the start. So I really had that in mind, and that impacted a lot of how I set up and structured my business. In the beginning, of course, like most entrepreneurs, used my family and friends network to raise money. So I put in my savings. I started reaching out to family and friends by year 1 and 2, kind of getting small amounts here and there and trying as much as possible to invest wisely in what would, kind of further our business. And I think one of the learnings at this point in my company's history, so we're 11 years this year, in the first 2 years, it became quite apparent to me that I needed to keep records of what I was doing. So I needed to show the financial success or growth of the business. There wasn't much financial success. I wasn't profitable, and I'm not expecting that businesses are profitable in year 2. But certainly it was clear to me that to keep on expanding the avenues for which I could raise funding beyond the people I knew, I needed to be very, very professional in how I was describing the business. And that came across, that came with keeping my financial records, keeping my sales data, creating, an updated business plan for the business, being able to articulate a strategy that made sense, and really talking to the different funders based on what was important to them, but aligned with my business. So I'll give a very, very practical example. From day 1, I really wanted to build a large factory, a large scale factory that could process like the maximum amount of fruits. And I needed $2 million to do that. But I couldn't really tell that to investors because I didn't have the track record. So I found that when I was talking about this big factory and this big vision, nobody was really responsive because I didn't have the track record to prove that I could deploy that money and actually grow that business. But what I could tell people was that from year 0 to 2, we had grown from like 10 stores to 200 stores. I'd been able to add new products to the market. I'd been able to, sell X revenue growth. I had been able to add new lines of my products. I've been able to reach new markets. So those metrics actually became more and more interesting and got me further than having this big vision. So in the beginning, I'm not saying don't have a big vision, but it's going to be very difficult to convince people that you can absorb a large amount of money to deliver results that you have no track record to prove. But you can package your track record and package what you've done and find the kind of people who would be impressed by that. So there were people who were impressed with me, having gone from 0 to 200 stores in 2 years, and wanted to, give me $50,000 or $100,000. And then I would be able to now tell them in a more milestone funding kind of method that, okay, the $100,000 you give me will buy me 3 new machines, take me to another 300 stores, hire maybe 10 or 15 people, etc. So that tweaking started to work very, very well for me. Instead of just being, kind of like generic in my approach to fundraising and saying, this is the big vision, that's the end goal, I broke that goal down into steps and into milestones that I could achieve. And when I achieved that, I found that I was getting more success getting smaller size tickets from people. First, it was my family, then it was people who kind of believed in me, and then it was people who were more established funders who didn't know me, but because I had track record, not only that, I had records of my business, and I could articulate the vision I had and the scale I was going through, it became easier for people who didn't know me to take a bet on me. And I want to sit with that point a bit because, again, I think that as much as fundraising is an art, it is a science as well. So there are some things funders want, and it is incumbent on the entrepreneur to know those things. It is not the responsibility of funders to find you per se and meet you where you're at. It is incumbent on you to make sure that you are packaging your business to the point that funders find it interesting to invest in. A lot of people, when I meet them, cannot articulate even where they're going in terms of revenue and scale. They cannot articulate how much they would turn over if you invested $100,000 or $200,000 or $300,000 in their business. Now, if you cannot do that, you cannot expect that an investor would feel comfortable giving you $2 to $3 million, right? Because they need to get, they need to demonstrate, firstly, it is usually money that they have gone and raised and they need to give a return to. And secondly, they need to make sure that they're putting money to get a return. So I believe that sometimes there has to be a lot of self-study on what makes your business, one, attractive, scalable, and where your own market is. That is another I think unspoken necessity where people think that, for instance, when you're talking about your business and how you're going to grow, you're speaking very generically. I think investors and people respond more to people who understand the detail of either their markets, of demographic changes, of income changes. So things like that, where people just ignore that. If I want to give you money, I want to know that you're going to plow that money in the right avenue is very, very important. So I think setting yourself apart by knowing your business and the ecosystem or industry very, very intimately is a really, really impressive way to seek funders. I am speaking more from a commercial perspective because I have, raised a lot of commercial money. I've also raised a lot of grant money. I can tell you that, like Aimé said, you cannot depend or wait on grant money to grow your business. One, it is few and far between, and the demand is very high. And two, you will end up having to compromise a lot of what you're trying to do, because it's seemingly okay to get grant, it's seemingly okay to get free money. It's not actually that free. Now, I'm also not one to dismiss grant money. I think it has huge, it can help businesses in huge ways. And I can speak to several occasions where grant money has helped me. But ultimately, being very commercial minded is what has gotten us this far, and not being unclear about what we would need to deliver to be able to grow our businesses. I also focus on this issue of scale a lot because a lot of people running businesses in Africa are not running businesses that can scale, and that is what investment money wants. So if you're not looking at your business from the perspective where you either get profitable very quickly or you can grow to a big scale, I think it's very difficult to find the kind of funder that will be, investing in you without knowing whether you're a business of profit or business of growing and scaling and then becoming profitable. We have not been profitable for the first 10 years. Another round, and this is because we've been able to demonstrate that we're scaling and growing, and eventually our business is going to turn a profit. Of course, we have demonstrated that we're growing, our margins are getting better, we're working towards profitability. So it's not exactly about being profitable from day one or year 5. It's about demonstrating that the nuts and bolts of your business can get to a point where it will be profitable at a large scale, because that is what commercial investors are looking for. I will now take it back a little bit just so that I don't lose the early stage and startup entrepreneurs in this discussion. I'm an 11-year-old business, so I know not everybody's at my level, but in the first 3 to 5 years, some of the tips I would like to give entrepreneurs, I'll reiterate what I said before. Keep your records very, very closely. I would always advise entrepreneurs to find people who are ahead of you by 2 to 3 years and understand what they have done to get there. That saves you a lot of making mistakes, but also helping you see what it takes to grow your business. So if you know a company or an organization that has raised, $200,000, $50,000, $100,000, I think it behooves you to speak to them or try and get in contact with them to understand what it takes to raise that kind of money so that you have a template for what to do. I would also say that entrepreneurs need to network a lot. Raising money is like a relationship. And again, it is very, very, people invest in other people. It's not really in the business alone or in the numbers alone. So I would advise that if you find funds that are supposedly interested in your sector or in what exactly you're doing, it would be in your advantage to try establish connection with these funds. Even if you're not ready, even if you're a bit too early, start speaking to them, start showing them your progress and where you're at. And you find that it does wonders to give people a sense that you are serious, committed, and are growing. It took me 5 years of engaging with my investors before they put money in my business. And that was, me networking with them, sharing them updates on my business every year, doing roadshows with them, etc. It was a lot of investment on my part, but when it came down to investing, it was a no-brainer because I had demonstrated, my capabilities, my commitment, my track record, etc. And it was just kind of, and it went without saying at that point. So I would say that before you start seeking funding, do your own homework, put your best foot forward. And also, I would say focus, right? Like just drawing on the point that Mr. Aimé made about focusing, just like you don't want to apply to every grant, not every investor is going to invest in you. I wouldn't follow up with investors who have never invested in your territory. Like if I'm in Nigeria, if an investor is not invested in Nigeria, I'm not going to follow up because I don't think the chances of them investing are very low. If they've not invested in food or agriculture, they're most likely not going to do that. If they're not investing at your ticket size or how much you're raising, or if they want, you to be profitable or have this revenue and you're not there, it's unlikely that they would invest. So what that does is it allows you to really focus on the sweet spot of investors who would actually invest in you and your understanding of what it would take to get them to invest, and realizing that it is a job. I mean, I'm describing it as work because it is. It's not just that you're running your business and somehow investors just come to you. You do have to do the packaging, the networking, the learning, and all of that. And it is, again, boils down to how big you want to take your business and how far you want to take it. If you want to be a business that is growing and getting more capital, these are the things you would need to do to continue to get, investors who are your partners to come along the journey. So I look forward to any questions people may have specifically. I love answering specific questions. Stop there and we can take the conversation further. Thank you.
Wow, Aimé, I'm sorry, I said Aimé, Affi, I don't even know what to say. You've answered pretty much everything I was going to ask. Literally, this has been amazing. I feel like we have to have you on a one-on-one because you're an expert when it comes to this. One thing I like that you said was, when people think about businesses investing 2-3 years, they're not profitable and they're like ready to give up. What kept you in the game? How do you know this is, your old thing? What kept you moving and saying, okay, I don't want to give up? And then one thing I've also learned is you've learned all this based on experience. How could people learn and know, okay, this is what they need to do, this is how they need to do it? Another thing I'll add to it before we go back to Aimé is I know that you're always readily available. Aimé, Affi, if you talk to Affi, she's ready, as in she has a pitch ready. How do people, entrepreneurs, make sure they are pitch ready as well? They have that document available. So those are the 3 things I wanted to ask.
Yeah, so thank you. I'll take them one by one. In terms of, not giving up, I mean, I will put that down to my personality. I am a very dogged person, but that is what entrepreneurship calls for. It is not for the faint of heart. And I don't make any apologies about, or I don't like to romanticize by any means how difficult this journey is. It's not easy. So when people do it, you should, and no one really can tell you how difficult or challenging it's going to be, because if I told you, you still would not be able to appreciate the the difficulty. But what I would say, that helps is obviously build a tribe of entrepreneurs. A lot of my friends are founders. I'm friends with Wandi, who's also a CEO. And when we talk about the challenges and the opportunities, that there's a lot of, bouncing ideas off one another and getting support, both on the emotional side, on the business side, connections, etc. So building a tribe of people who can continue to encourage you both, tangibly and with advice, etc., is very helpful. That's worked very well for me. Secondly, your other question around, being pitch ready and experience. I have learned a lot from experience, and one of my missions is to make sure that others don't have to spend the amount of years I've spent getting the information I have gotten. That's why I do things like this, and also why I make myself available for people to be very specific in their request, because I feel that if I can help an entrepreneur solve a specific problem they're having and save them either money lost or 1 year of making mistakes, etc., I've done a big good, because sometimes those are the things that really are damaging to entrepreneurs. I'm a wholehearted believer in learning from others. I don't believe I should be making the same entrepreneurial mistakes that people ahead of me have made. So even in my 10 years, when I wanted to figure out where to, site my factory, I spoke to 15 people. I visited 20 factories. I really went around to understand what was the best decision I could make that would not tie me down, lock me down, or would be a course I could not correct. And doing that really made us pick the perfect location for our factory. And this is how I apply to any other thing. If I want to do something, I find somebody who's done it before and get their perspective. I don't believe that I should be trying as I go, because there's so many challenges to contend with. I don't want to add any more or make mistakes that are avoidable. And then lastly, being pitch ready, I think comes from, again, one, doing a lot of pitching, and two, again, leaning on that success of people who have done it, people who have been successful in either raising funding, have had a lot of experience, had a lot of rejection, and therefore know what to do. So I also leaned in on that. I spoke to a lot of people. I read a lot of pitches. I asked people for their pitch books and pitch decks, and then I tweak mine. When I go to a funding event, I get feedback, etc. And so I do believe that, the information is out there. People don't realize how much you have to do it. But I also believe that if you want something hard bad enough, you will go after it. The good news is that there are people who are willing to share information. There's public information around pitching. Investors are so open nowadays to even, sharing with you what their mandates are and being very clear and working with you towards that. I think entrepreneurs must lean into that and must, as much as possible, be prepared, prepare themselves, because like I started off saying, funding is scarce, but the demand is high. So doing what it takes to set yourself apart is one of the biggest ways you can actually be successful in raising funding.
Thank you. Thank you very much, Affi. And one of the things that you said and Aimé said, for someone that is just starting out, and this, you can answer this, and Aimé will answer this as well. Where can people go to find access to funders? Where, if you're new in the space, where do you learn who is funding? Where do you get all that information? Is there somewhere where we can get the information from?
Yeah, I mean, I would love to say there's one source. There's not one source. You have to use a variety of sources. One, I think your network. Nowadays, people send me funding and funding requests, grant opportunities. I put myself out there, but this is the beauty of building a strong network, because then people kind of give you this information. There are grant resources online that people know, but also just reading about your sector. If you're in dried fruit, or like me, I will read about what's going on in my sector, and through that you will get who is funding that sector, or who has invested in that similar sector, or you read about a successful company and you hear who funded them in year 1, year 2, year 3, and that kind of starts to give you an idea of where you start building your funding sources. Attending a lot of events. In the early days, I used to attend a lot of events to see what's going on in the funding landscape, startup events, pitch competitions, things like that. That's kind of how you keep building and growing. And also also meeting people, because you find that in a lot of those events, you have successful entrepreneurs or people who are a bit more ahead, who are coming in and want to give back or, give feedback. In the last pitch session I attended, I met a young lady came up to me and she was like, "You're gonna have to be my mentor." She kind of forced herself on me, but through that network we met, and I've been guiding her, offline and supporting her, and those kinds of things. I mean, giving her information that would help her get ahead. So those kind of fora are a great way, and I do it because it happened to me too. I met people who were ahead of me at similar events, who took a chance on me, who gave me information, who answered my questions, connected me to people. So it is a very much a combination of being online, growing your network, talking about what you're doing, going to relevant places, but just also being informed about what's going on in your sector.
Thank you, Affi. So network is very key. And she still sent me something last week that says, okay, I think you should be good. You'll be good at this. I think you should apply for this. So I think the network is very, very key. So Aimé, over back to you. Where should people be looking at? And what are you personally, from your perspective, what kind of SMEs are you trying to fund? How can you get them prepared and readily competitive?
Yeah, thank you, Wandi, and thank you, Affi. I will not go far from what Affi has said. So her points are really, really insightful for SMEs, startups, growth, businesses. So it's good to hear where she came from. So from your last question about what should they consider or what products are there, where they have to go. So first of all, networking, as Affi was saying, is true, is okay, and it works perfectly in this sector. And secondly, it's not that there is a typical source of funding that you can find there. So my first point when I mentioned what it requires to raise funds, it was do a full scan of potential funding opportunities. That was the first point I mentioned. So this means that, so depending on what we are looking for, do a full scan. If you're looking for grant, search for organizations that are providing grant. Don't run out to the banks if you are looking for grant. Don't run out to the organization if you're looking for debt financing. So it depends on kind of financing we are looking for, and you can do the scanning. So it's better if you know that maybe you're looking for grant and you're looking for equity, you do to separate, scanning, see who is providing equity, who is providing grant. So that gets me to the point where I can mention like 4 products, financial products available on the market. There is grant, which we've been talking about, and Affiong talked about it. And there is debt that you can access from financial institution or DFIs. There is also equity that gives the provider shares in your businesses. Sometimes you'll give shares in your business if you want to grow. So I know like some of the family businesses, they are not open to equity funding. So they want to keep the business as their own, as their family asset. So sometimes they are struggling to raise funds. And there is also hybrid financing, which can be a mix of 1 or 2 or 3 of those 3 other products. So it depends on what kind of financing you're looking for and how to approach the typical financials. So how to stay competitive in this market? There are points that Affi has retaliated on, and I won't come back to those, but I can give like 5 typical strategies to keep in mind as an entrepreneur, whatever the stage of the business you are at. So first of all, you have to do continuous market research. Because you are established with 11 years as Affi, don't just, sleep and say, okay, I have 200 outlets, so I don't want to see what is going around. Do a market research, conduct regular market research to understand the changing dynamics and identify new opportunities. There are opportunities in the market, in the funding, in the market that you might supply, in the supply of raw materials that you might need. So do market research in all aspects. Second point is to be flexible. All the business strategies should be flexible. This is a dynamic and changing market. So you should be developing a flexible organizational structure and culture that can respond rapidly to market shifts and customer demands. If you are failing there, you might still stay where you were, and you'll be outdated in a matter of months. A third point is to be innovative. Look for new ideas. that respond to the market. If the funder, for example, organization are looking for impact in your businesses, try to accommodate the impact. Am I responding to gender? Am I responding to to climate change? Such kind of innovations. If it's technology, is fine. Is it aligned with SDGs? Is it aligned for the sustainable improvement that the funders want to see? Put customers at the center. That's point number 4. If you are failing to put customers at the center, you are failing. Continuously improve customer experience, personalize offer links. So you don't develop products that is there for the generic market. You have to really be specific on who is the target market. And you should also build strong relationship with your customers. And the last 3 is to analyze the competition. So sometimes you are there, you think you don't have a competition just because your products are sold entirely, you don't have any stock that stays there at the end of the year or the end of the month. You should be analyzing your competition. Someone there who you might be, neglecting might be having a growth rate that is way superior than yours. So you should be analyzing your competitors to see where they are, what the strategies they are implementing, and align those with the market. Otherwise, you might find yourself sometimes, we have experiences of companies that have neglected to to be innovative and to embrace the competition, so they fail. So those are the key strategies to remain competitive in this market. Thank you.
Thank you, Aimé. Thank you. Grace and Christiana Evans, please, we want this to be engaging. So feel free, if you have any questions to ask, please, you can also ask them. So one thing I wanted to talk about is, Affiong and I talk about this all the time. When it comes to investment funding, we found out that the guys in the market tend to get all the funding. I saw a post on Twitter recently, I'm not sure if it's Twitter or Instagram, how somebody talked about an American pitching. I don't know if you saw that, Affi, an American pitching, and it was so amazing, and said, I have to learn how Americans pitch. But one of the things that, guys that, they overestimate their numbers, they're bolder, and, to just get the money in the market. So how can women be more competitive? Are there funds specifically for women? And after you answer that, I'd like Affi to answer that, because we talk about that a lot. So Aimé, over to you. Aimé.
Okay, sorry, I didn't get the question. I thought she was directed to.
Oh, okay. So how can women get more access to fund? How can they be more investment ready, but also be able to compete with the guys, get more funding? In Africa, we tend to get the men get the funding.
Yeah, so it depends. Sometimes I attribute that to the culture and to the social perspective in each country. There are countries and there are businesses where, for example, women are successful than men. For example, yeah. But if you go, for example, in construction, this is a different sector that I want to use as an example. So men are dominating that sector, but women are coming on board. So Affiong mentioned, like, if you are not where you want to be, just look for another business that has been there in the 5 years. So if you are a woman looking for funding, you should approach a man who has done so. They are really, sometimes they even don't have a request from women to support them. So it's about how you structure yourself and your business. And still, if the idea is good and is selling, and that person can tell you, okay, these are the networks that I have, and I'm able to connect you. So men are willing to help women. But one of the things that have been, in discussion for long is when it comes to debt financing. This is when women are struggling a lot. This is because when I started, I mentioned some kind of culture in all the countries or societies. So women are not attributed to assets. So sometimes the collateral, the security that is required by financial institutions. So women, like all the assets, the collaterals belongs to men in most of the societies. So that's where females are struggling mostly to get financing. But on the grant side, for example, if the grants, I think they stand both chances to win. But given that, in the past, maybe men have been more involved in the businesses and female not, but are coming on board, you might find that men have more connections and opportunities to link up with financial service providers than women. So it's about creating the networks, about learning from a male entrepreneur who has been that situation in the past. So just because you are a woman doesn't mean that you don't have the capacity to raise funds. So to be an entrepreneur, Affi is an example, a typical example. So there are men who have failed, and Affi is there. So it doesn't mean that she can't do the job. So women have equal opportunities than with men, and sometimes even I can say more opportunities than men. You see, sometimes you see they say women entrepreneurs are encouraged to apply. So you see, they never say men entrepreneurs are encouraged to apply. So I can say there are equal opportunities or even more opportunities for women. So just be courageous and take on from there. So on the youth also, allow me to also speak on the side of youth. Youth, they have to learn. They have to be, ambitious, but moderately ambitious. So when you start as a young entrepreneur, sometimes you have ideas, you have led, you have been exposed to some businesses that have grown so fast and you want to be there. This is a competitive market. Don't put yourself in the shoes of someone who started a business in 60s and say, oh, he started at the age of 20. I can do that at the age of 19. So this is a dynamic market. 2023 is different from 20 years ago. So you should take time to learn. Don't just rush and want to make profits. There are years that you might not make profit. Embrace that and see how you can get out of that. And look for mentors. So look for mentors who have been there to help you gain knowledge. Knowledge is the first capital or the first investment you have to do in business cycle. Yeah, thank you so much.
Thank you. I think Grace had one question for you. She wanted to find out for youth-led businesses, are there any ready toolkits that they can use to map investment resources or to get them ready to pitch, especially for youth-led businesses?
As they're getting ready, are there toolkits that they can, or resources document, something that they can have that is, tangible, that they can say, I can use this as I'm building my skills, building my research and that kind of thing?
Yeah, so in many countries, there are incubators, business incubators or accelerator programs. So that's the first way to network, but also to get access to resources. For example, we have Innovation Food System Solutions. It's a tool, again, online tool, which is open to everyone, where they can go and find there is even a guide tool for raising funds. So this is not for SMEs, are typically SMEs, but everyone who wants to make or who wants to learn how to raise finance, regardless of the product, grant, debt, equity. So there is a tool that we have developed more than 3 years ago, and also a training video, some videos on training how to raise finances. So there are tools on the market. So it depends on who is supporting, but business accelerators and incubators, they have tools that help businesses to grow. Yeah.
Thank you, Aimé. Thank you. We found out that someone joined us on the panelist section, but I don't know why we have a glitch with this name thing. So please, if you can rename yourself, that would be great. So I know we're coming to the end. I wanted Affi to talk more about, the question about the woman thing. I think from the advice of how women can be just more bold and more, just going out there and getting the funds, what advice would you give them? And I'm sure anybody listening to this will want to find out in terms of people that have products that they're trying to expand into different market or different stores. How were you able to achieve that? Because you're pretty much everywhere, your product is everywhere. So I'll give it back to Affi.
Yes, thank you very much. I would not add too much to that. I think that, sometimes I do think that there is room. Firstly, I do think that this is the best time there's ever been to kind of be a woman entrepreneur. I will say that there's a lot more opportunity for women. There's gender lens funds. There's funds that encourage women ownership and co-ownership in businesses. So I think that, female entrepreneurs should lean into that. I also do think that behind all of that, though, there is still this layer where women must understand what it takes to really present a scalable business. And I say that from experience because the business I started in the beginning, and my approach to business did not take into account the needs of an investor, right, that would want to put money in scaling my business. You know, it was all about, it just was not from that perspective. But once I understood and learned really, and like Aimé said, learned from more successful, both men and women who have gone ahead of me, it was clear that what I needed to do, regardless of my gender, to get investment was to pitch a particular type of business and to make sure that my business was meeting the needs of investors. Some of that require, you know, really slant towards women. I have my investor, my lead investor is a gender lens fund, but I can also confidently say that I wasn't just invested in because I'm a woman. And even if I am a woman and my business did not meet their growth requirements, I would not have gotten the funding. So for me, ultimately, there needs to be an understanding about what do scalable businesses look like, and are you building one that can actually scale and absorb investment, right, to grow? So, you know, things like understanding your market, your unit cost, your profit margin, your you know, all these things that just, you know, really need to be understood in detail, you know, set you apart and are the difference between whether you're a small scale or lifestyle business, which a lot of women tend to be in, versus a scalable business that can absorb funding and give financial returns. So again, I think it boils down to learning, knowing what's in trend, knowing what investors are looking for, and leaning into that as much as possible. For youth-led businesses, I mean, I will say honestly, I'm not one to be so pro youth-led businesses. I think that a lot of youth there is investment and support for that, but building the track record is more important for a youth business, right? Because you want to spend your early years knowing how to run a business, how to formalize your business, etc. So for youth businesses, I would say a lot of their help should actually come from learning from others and learning how to structure their businesses. You know, it would really set them apart in terms of being able to secure funding and actually build and grow their businesses, especially when they have, you know, a lot of energy, right? So I would say for the youth in the room, please don't discount learning from people who are ahead of you, the mentorship, and really just understanding you know, how to structure your businesses. That will really get you further down the line.
Thank you very much, Affi. Thank you. This has been amazing. Thank you, Aimé, as well. I'll give it to Grace, but I would like you guys to connect. So maybe Aimé had some money for you to invest. So we never know since it's out there. So please, I'd like you guys to connect, and I'll give it back to Grace. Thank you. This has been amazing. Grace, over to you.
Thank you so much, Wandi. Aimé, Affi, oh my goodness, the tips in here are phenomenal. Thank you so much for your time, for sharing your wisdom, your input. I mean, the takeaways are just, again, I say phenomenal. And I think it would be a good connection, certainly for Aimé and Affi, and we will definitely see how to do that. Manasseh, thank you for joining. That is the cluster lead for the Nutritious Enterprise Unit. And again, though you have come at the very end, but this will be shared and you'll be able to catch up with all the content that has been put together. And we look forward to having more of these platforms. And I wish you a very fantastic rest of day. And let's talk again soon. Have a good one.
Thank you. Thank you, everyone.
Thank you. Thank you for inviting me. Thank you.
Bye-bye.
Thank you.
Bye-bye.